Hear ye, come one, come all of my aspiring traders all around the world. My name is Doug, and trading is my game, and I am your host for the next 60 minutes to entertain, educate, and enlighten you on all things market related. You are at the XM live session in the beginner's room, and our topic for today, which we do every Thursday, Thriving Thursday, I should say, is reversal trading. We're going to talk about the art of reversal trading, everything you need to know, and whether you want to do reversal trading. You have to care about it because it's important for you to know who's on the other side of every trade that you take. So let me first say hello to all of my great friends out there in XM Nations. Always good to start out my day here with you. It's very, very early where I am. 3 o'clock in the morning, man. Stay hard, right? 3 o'clock in the morning. And I want to say hello to all the social media viewers out there as well. The chat is open. So as always, I'm going to be here for the next hour one way or the other. There's nothing I can do about it. That's the deal. But make use out of all of these sessions here. If this is your first time coming by, welcome to the sessions. You'll see up in the upper tab there in the upper left corner, there's two different rooms, the beginner room sessions that we have here, which is usually just one instructor talking about their types of strategies, their experiences with the market. It's more of a, like I say, an intimate approach. And of course, the advanced room is where there's a lot more debates where we talk about specific trade ideas and so on. But in these, we want to talk about building the right foundation to be a successful trader, how you can navigate yourself through bull markets, bear markets, sideways markets, and how to really make sense of them as you proceed. So again, got any questions? Whatever's on your mind doesn't matter to me. I'll answer it the best that I can. And if I cannot, I'll point you in the right direction to do that. So the chat is open. So let's talk again, begin about reversal trading. As I always say with these sessions, just to get everybody on the same page, there are two different types of reversals that you will experience when we're using that word. Let me go back for 1 second. The word reversal trading often gets misunderstood by the newer trader. And the rule of thumb is you cannot buy something just on the fact that you personally feel it is oversold. This is a term, oversold, overbought, that gets used way too much in our industry, and it sort of runs with itself. And there's a lot of misunderstanding when it comes to that. So if you use something like an RSI indicator or any sort of overbought, oversold indicator, you can't begin to reverse a trade just on that premise alone. If you do, at some point, you're going to step into the lion's den and get ripped to shreds. That can't be the reason. And in my sessions, when we talk about reversals, we're looking for specific parts. Now, the real reason why a lot of you need to understand this is because you may be looking right now at a future correction in a market. They all correct at some point. And you want to know what those signs are way ahead of time, way before everyone else, so you know how you can position yourself in the future. That's what we discussed. Now, back to there are two different types of reversals. There are what you'll hear me refer to. There's a reversal, and then there's a contrarian approach. A reversal is just going with, you can actually do a reversal trade going with the market. I'm going to try to write this up here. My penmanship is horrible with a mouse. So reversals usually mean that you are buying a dip in a market. So a trend that's moving upwards, you are buying pullbacks in stocks or other assets as it's moving higher, but you are not chasing them at high of day. You're not chasing them at all-time high. And it's better to do it normally that way because you allow yourself more room for profits as well as having less risk. And then there is a full-on contrarian trade where you're going completely against the grain. It's important to distinguish the difference of the two because normally, and let's say, let's just talk about an uptrend, like a moment like this where a market is very directional and is moving up, whatever that span is. Okay. Doesn't mean long-term trend can be down, but short-term trend can be very powerful and very, very bullish and bearish and so on. But let's just try to keep it simple. As you're moving straight up with this, right? Usually a reversal trade is something you can get into and you can hold it. You can be a little more aggressive because you're participating with the overall trend, and that gives you a chance to make a lot more money. If you're going against that and you're short selling it or selling into that strength, typically in the beginning of these trends, it's just a short-term trade. You're just making a quick trade, a day trade, maybe a one-day trade, but you're not falling in love with that. Knowing the differences helps you as a trader before you ever get started into the trade is knowing what you're actually doing. So if you never come by any of these sessions again, wherever your journey in trading takes you in the future, there's something that's universal for all of us. And one thing that I feel is very important for all new, aspiring, struggling traders to learn is that you can trade anything that you want. You can make money trading anything that you want, any instrument that you want. There's no uh, yeah, people make money in foreign currencies. People make money trading commodities. People trade money just indexes. It's just people just stocks, just cryptos. Yes, you can make money in anything, but you have to have a strategy. The most important thing is that before you ever get into just pushing the button, buying and selling, or whatever it is, know what you're getting yourself into. Have all of the variables about what could potentially happen in front of you and try not to be delusional about it. Just know exactly what you're doing, going into it and say, this is just a scalp. This is just a day trade. I'm just here for cash flow. This is an investment. This is a medium term trade. This is a longer term trade. I believe in this company and or whatever the reasons are. Know where you're going because that will help you when it comes to exiting or what your expectations of a trade might actually be. So let's talk a little bit about this. We'll take a look at the U.S. market, and one of the questions is going to be, when you put any metric up here with the U.S. market, I got the U.S. 500 up here. This is a daily chart for those following along. Eh, We can obviously see what's happened. You have been moving up, right, consistently. Now I highlight this in a lot of my sessions as well. Uh, yeah, let me back this out for just a minute. You can always find the information that you're looking for in a chart, right? This is why as traders use them, but there's proper ways to read them, and there's not to do it. I shouldn't say proper ways not to do it. It doesn't make any sense. But here's another case for the reversal trading idea. If you take a look at any large move, like let's take a look at that large move, right? Or this large move, or let's say even this down move, this large down move, right? If you look at every single one of these moves, these large expansive moves in any market, you're going to find the same conclusion with all of them if you look. Every single one of these rallies or sell-offs, those large rallies and sell-offs came from previous rallies and sell-offs. So to make sense of that, not to confuse everyone, because when I said that, it's like early in the morning. I'm like, does that make it? When you look at this rally right here, right, the very bottom of it to the very top, the whole entire move, what was the origin of that move? Where did it come from? Well, it came from a sell-off. Where did this rally come from? It came from a sell-off, right? Where did the sell-off come from? It came from a rally. So the biggest sell-offs that you will ever see will come from the biggest rallies. The biggest rallies that you will ever see will come from the bigger the sell-off. So typically, the bigger the sell-off, the better the rally is going to be, and so on. And it's consistent that way. Look, rally, rally with all of these charts. So the question that we look here is this the moment this market moves higher, or is there another large move? Is it going to sell off? What's going to be the ultimate outcome? Well, unfortunately, we don't always know the answer to that, right? That's the key. We don't have um, necessarily. None of us can see the future, right? So we don't really know. What we want to do is look at these charts and try to formulate in the best possible way that we can, in a non-biased manner, how to read them, right? So let's take a closer look. We'll begin with the daily. I prefer it. It doesn't have to always be that way. You can use weeklies or monthlies, but I think for us shorter term traders, daily's just fine. And then what we want to do is bounce down to 1 hours or lower time frames down to the 5 minutes and try to back up what we are actually seeing, right? So first and foremost, before you do any types of reversals or you're looking at potential reversals, you take a look at the shortest of trends. So for the last, let's say 1, 2, 3, 4, 5, about 5 days, the market's been relatively, for lack of a better word, let me use weak. Right? There's not been a lot of power, not a lot of strength, and it has, in fact, traded a little bit lower. And it did the same thing roughly in the same area a couple of weeks ago, right? Started here, faded down to here, started here, and now you have faded down to here. So the next question is, will this do this number and reverse to the upside, or will it break that support and start trending down maybe into a past level or a deeper, harder, more aggressive correction? Again, the answer isn't as simple as straightforward as one would like it to be. Here, we don't know. And to make things a little bit easier for some of the newer viewers, what a market is actually doing, just to take a step back, is to understand just a basic function of a market. You'll see the same type of behavior throughout everything that you ever get your hands on. And that is there's an expansive move that goes up or down. It doesn't matter what it is. It can go up or it can go down. Now, at some point in history, as this is going up, it will reach a point where it stops moving up in the same aggression or stops going lower in the same aggression. Again, potential reversal area. Now, these areas can be picked through charts where you look at past resistances, past supports, and so on. I don't want to get into that right now. I just want to talk about the theory, since there may be a lot of new people watching this, and I want you to get just the basics down so we don't get lost throughout the rest of this conversation. And it's very normal that you will eventually reach a point. Now, it helps us as traders not to predict that point. Not say that's the number right there. That's how it's at 5,000, 2,000, 3,000, 50,000. Just the market will pick it whenever the market's ready, whether it's a Bitcoin market, a gold market, a US market, it will pick the point where it wants to stop going up. Let the market make that decision. And you see that right here. About in this resistance area, the market begins to slow down, right? Now, in this consolidated area, all consolidation, I also teach a decoding chart session, and I want to kind of highlight that for, well, I do that Wednesdays. In consolidation, it's a period of like the market itself is catching its breath. It's neither bullish nor bearish. It's just sitting there thinking about what's happened. So in this case, the market had rallied quite a bit in a very short period of time. And now investors, traders, institutions are looking at these prices with caution. They were really attractive at one point, a couple weeks ago. Now everything's gotten high. You're going to see that all the time, little micro bubbles, rallies, and all that good stuff. And then you get to this point, and it's like, they're not sure they want to put more money, and the market will go back and forth. It will be bouncy, it will be choppy. Now, the way a trader trades through this is far different than they were trading in the expansion cycle. We have to understand that the way that we take our strategy and employ it into the market is very dependent on how the market's acting itself. So it's a period of time goes by. It's real clear to see. Period of time goes by. Yes, it doesn't look like there's going to be a pullback. They're waiting on news. They're taking in Federal Reserve, central bank information. And then the market decides, all right, look, we should buy some more. And there's another rally. And now you're back here. It's gotten to that same point as it was here, a period of caution. Again, it doesn't mean that it's bullish, doesn't mean that it's bearish. What it means is you are undecided what the future holds, right? It's just a moment of pause. It's not a negative, nor it's positive. Now, understanding that, you'll see there's a common move in markets that's universal. You will move up, pause, either move up or move down, right? The real money is made on these expansion moves, right? So there's an expansive move down and then a pause, then up, and then a pause, right? So it's moving between these pauses, and it makes it so this market right now is setting up for either one of those scenarios. That's what's happening here, right? So the question is, we know in the near future meaning maybe next week, this week, February, March, somewhere soon, uh, definitely before the year is over, this thing is going to make a definitive move. It's going to either break above this consolidated area or below this. And you're going to see multiple days trending in one direction, right? So one of maybe the misused quotes in markets as well is the trend is my friend. Well, trends are not long lasting. Like this is a trend, but that's not, right?